So we have our next speaker. Mr. Mohammad Maad is the Chief Information Security Officer at Faisal Bank Limited. He has over 29 years experience within the information technology, information security, and technology advisory services. Earlier in his career, he held the position as the Executive Director, IT Advisory for Ernst & Young, Chief Information Officer for ZTBL, and Head of IT for HSBC Pakistan. Mr. Maad is member of the Cybersecurity Forum of Pakistan Banks Association, Cybersecurity Alliance Pakistan, and Information Systems Audit and Control Association, USA. He was on the board of ISACA Karachi chapter for many years, holding various portfolios. As a consultant, Mr. Maad held organizations in the information security domain and managed a number of engagements, ranging from baseline reviews to ISMS development and implementation. He is a frequent faculty for various curriculum, including CISA and CISM. Today, he'll deliver a talk on securing the future of financial services. I request you, sir, to please take over.
Thank you very much, Talat, and it's good to be here. Just want to put something in. I've been actually listening to all the talks since morning, and there have been some very interesting ideas. One of the talks, I think somebody asked a question about money tracking. So just wanted to touch upon this fact that it is possible in this country, at least in Pakistan, because State Bank of Pakistan has issued a lot of regulations about it. You cannot open an account unless until you're verified. So primarily, if an account is verified, then any money that is deposited into the account, whether it is online or physically at the counter, that is tracked, and we can actually trace it back. So if somebody fraudulently transfer money from one account to another account in the bank, in another bank within Pakistan, it can be traced out, and then the regulations allow that we can actually hold accountable the recipient of the funds, why this money was transferred to them. I'll just share my screen for the presentation. The topic is actually in continuation with the previous talks, and it's about securing the future of financial services. Now, somebody might want to say that, how can somebody secure financial services? And I think as CISOs in financial organizations, that's our bread and butter. But in order to secure something, secure a financial service, we need to understand exactly what financial services is. And if this would have been a physical audience, I would have asked the question, you guys understand what financial services is? And I can get various kind of answers, but nothing which is targeting or responding to the correct stance of or correct definition of financial services. So without further ado, let's go into that. Now, the only thing which the banks are presently doing, they're offering the various services to its customers, but at the very same time, we are trying to achieve the government's agenda of banking the unbanked, which means that people who do not have bank accounts, we are going out there and we're making sure that these people come on board onto the bank accounts or on their bank accounts, and then the entire economy, the economic system is then documented and traced back, so that transfer of money from one particular area to the other can be traced back, and the government knows how much money is floating within the entire economic system. Now, yeah, people would not want to disclose, but that's an important thing. In order to make the country prosper, we have to make sure that all the money that is in the system is documented and available. So that is the entire mode and entire motive of the government of Pakistan right now, to make sure that people go on and get customer onto the bank. And if you've heard about Asan schemes, about BISP cards and all of that are the tools available to the banks so that the unbanked can come on board to the banking system. Flip side of the entire thing is the technological advancement. We're going to touch upon this in the presentation, how banks have moved on from the bricks and mortar, and in fact earlier than that, to something of a digital age. We've been hearing a lot about e-com, what sort of services are available, how people can transact now, and then the threats linked to that. So all of that is in my presentation, so we're going to touch upon all of those in a second. So first of all, we need to understand what typically a bank is, and when we ask a general person, a common man, they always think that the bank is just a retail branch available in their own community, which is actually not the case. There are 9 or 10 different type of organizations that are considered to be a financial institution. Now, investment bank is one of them. Internet-based banks, which have no bricks and mortar, that's something is there. Mortgage companies, insurance companies, and so on and so forth. Central banks is also a banking institution, which is the banker of the banks itself. We open an account, like our bank has opened an account with State Bank of Pakistan, and so is all the other banks. And State Bank provides us money, just like you going to a bank, presenting a check and taking money out, we also do the same. But the size and the sum of the money is too large, because we have to then provide this sum of money to our customers, our consumers. So all of this is there. Islamic Bank is not there, if you can notice, because the Islamic banking model is typically the same as of the retail bank. Only the products and the method through which these products are offered is slightly different, other than the entire banking operations is based on the retail banking model. So it's important to understand what type of banks we have within this economic system. And if you look at the services, typically the services that any common person acquires from any bank, any retail bank or commercial bank, is about savings, payment services, loans, insurance stock, mutual fund, and a couple of others like safety deposit lockers. So that's the typical suite of services that any individual can get out of a bank. Corporations and larger corporates can get more suite of applications and services from banks, but they are targeted for those organizations only. For example, syndicate lending, I don't get a syndicate loan from any bank because I do not get entitled for that. But a large corporate, for example, Shell Pakistan, can actually take that kind of loan out of the bank. So these products and services are offered by all the banks. You can actually go out to any particular website and you'll see, we got saving accounts, we got time deposit accounts, we got current accounts, we got loans, mortgage loans, credit cards, and whatnot. The whole list actually is never ending. But the important thing is how these products and how these financial services are delivered to the consumer. So this delivery is important to understand. Now consider this, if I go back to the slide, if these services are offered out of a fort, made out of concrete, and there was no way you can come in or go into this particular branch, there is no threat from outside. The only threat is somebody stealing money, cyber threats. Other than that, there's nothing wrong with this. It is ironclad. But when you start delivering these using different channels, then of course different threats are going to come, and then we have to understand those threats and start to build countermeasures against that. So how this thing started in the early 1800s, or maybe even before, banks used to reach out to the customers, and typically farmers, because at that time industrial revolution didn't take place, and the most prominent members of the economy were farmers. So they used to put seeds in, put fertilizer in, they used to grow their crop and they used to sell it, make money out of that. So bankers used to go to these farmers and they used to sell loans. for the farmers to take the crop proceeds, the fertilizer, the seeds and all, so that they can grow these crops and sell it to the market and then pay back the loan. And this is how the economy used to work. But then the industrial revolution started to come in, and then the banking services were matured a bit, and then the bricks and mortar of the branches were there. So people used to go to the branch to avail those services. I mean, that was the typical model up till 1980s. In Pakistan, it was actually something late 90s as well. There were no other services other than the branch that you can go to. The first technological advancement start to come in from a consumer perspective was the introduction of ATMs, where the bank was open to the customer 24/7. Uh, I remember when the first time I deployed an ATM into my bank. I used to work for another bank at that time. So, I mean, I was amazed because of the convenience. Then I didn't have to wait in line to get my check and cash and take money out. The ATM was there 24/7. Could come on a Friday. We used to have our weekly day offs on a Friday that time, so I can actually drive to the bank ATM, take money out, maybe take money out at 11 o'clock in the evening. I didn't care because the bank was, for me, the bank was open 24/7. So that was the first ever technological advancement within the bank for the consumer, where ATMs and CDMs were introduced. The ATM was actually introduced initially in 1960s, but at that time it was not widely used because of the limitations of the use of the identification. Now, right now we all have the ATM cards, the debit cards and all. At that time it was hard to get, and it was too expensive to produce those magnetic strip debit cards. But somewhere close to late 70s and early 80s, this thing was very popular, and then it just took off from there. Cash deposit machines were another replacement of the counter where people can actually deposit cash into their accounts, and it was made available immediately to them if they want to draw again next year or maybe within the hour. Then comes the online banking. Now, the online banking is thought of the internet banking. It is actually not. Online banking regime came in when all of these services were available in all of the branches simultaneously. So, and you can consider the layout that if a particular person is sitting in Karachi and he wants to send money to one of his colleagues or one of his friends in Islamabad, he can go to the branch and give money to them so that the money can be transferred immediately to the account in Islamabad. That was the concept of online banking. And I remember back in 90s, we used to charge our customers for this fee. If I wanted to transfer money, there was no regulation available saying online transactions functionality. It used to be captured under a head called telegraphic transfers. So that was the online banking. Then comes digital payments. Now comes the internet banking, the mobile banking, and all of those facets that you can see right now. You can actually do your transactions sitting in your lounge. You don't have to go out of your house. If you want to make payments to your grocery shop, you don't have to do anything. You can just buy things online. The e-com is now integrated to your bank accounts or your credit cards, and you can do a lot of payments. All of them is called digital payments. And this will be the focus of my talk in the later slides. So once the digital payments got introduced, digital payments is as old as 1990s in the world. In Pakistan, it is relatively newer, but historically it's been there for a while. And now we are talking about cashless and contactless transactions. If I don't have a card, I don't care. I can still draw money out of my ATM. I can still perform my transactions online or at any merchant. I don't have to have any kind of tool. If my biometric signature is with me, which is my thumbprint or my fingerprint, I can still do the transaction. I can actually use a contactless transaction where I can just tap my mobile phone on the POS machine and make a payment. So all of this is there. It is being tested, at least for our bank, and we are going to be launching this service to our customers in the near future. But this is not something which is of fiction. Uh, Back in the US, I remember when I was there a couple of years back, the tap and go feature was available in most of the merchants available. And that was surprising to me because that was a bit new to me, especially the m-commerce as well. Mobile commerce was there, which was never introduced in Pakistan at that time. So those are the things that started to come in. And this is also introduced in Pakistan now, so that our consumers can, get benefit out of that. So that is the service delivery model to our consumers and to the economy as of this time. Of course, when these services are there, these services are targeted by different groups, different people. The presentation that was made just before this one talk about various threat actors. Now, these threat actors are numerous. I'll just touch upon the digital payments as well, and it's just a time series how digital payments evolved during the entire thing. And you can see uh, that the first mobile payment and first contactless payment was made in 1997. So that is there. Threat actors are, again, as explained in the last presentation, were people who have a motive, and they can actually thrill seekers and to the extent state-sponsored attackers as well. We have witnessed a number of threats coming into the banks, and why banks are so popular for these threat actors, because this is where the money is. It is not at my home, it is not at a workshop, it's in the bank, because banks are custodians of the money. So all of the threat actors, they are actually targeting the banks world over so that they can take that money out and use it for their bad purposes. So again, an evolution of how threat actors evolved. Initial days, they're just breaking walls. They used to put dynamite into the walls, blow them up, go in there, take money, and run. That was the modus operandi. Then robberies start taking place where people have guns. They go into the branches, take cash out. This is still happening. Uh, you know, the president mentioning the guards there. The guards are there just to protect the bank from these kind of threats. And of course, a number of frauds, number of scams through which these fraudsters, these threat actors steal money. It has now become uh, a very large universe of threat actors. We actually don't know who these threat actors are. You might have heard about persistent threats, advanced persistent threats, APTs, around the world. North Korea is one of them. Somebody from India, state-sponsored attacks. China is doing something. Russia is doing something. So a lot of information is out there, but we are unable to identify in great clarity who these threat actors are, but they are everywhere. And more so, they are inside the organization as well. The insider threat is too large, and I think it's one of the points that I've made in my presentation as well, how the insider threat is controlled per se. So, uh, so from here, if we move on, global financial services trends, how the financial institutions in the world are leveraging technology and other development to offer and promote the financial services to their customers. The first one is fintechs. Fintech is, again, a tech company. There are a number of fintechs available. That you've heard about Uber, you've heard about Food Panda. Maybe there are a couple of more that start coming. So all of these are fintechs. They have an idea, they developed a particular product, and they embedded this product using technology into the economic system. And the banks get, interacted with these fintechs in a way because they don't own the money. The money is residing within the banks. So that's how these fintechs are integrated with the banking system. And now this amalgamation and these two entities have been close so much that it is very difficult to differentiate which of these organizations is a fintech or which of them is bank. To me, if you ask me, the largest bank in Pakistan is actually the largest fintech of Pakistan because they are churning out different applications for the consumers in such a speed that other organizations fail to do that. Similarly, there are fintechs which are now offering banking services. Telenor Microfinance Bank is a very good example. Telenor EasyPesa. Now, because of Telenor EasyPesa, there was a revolution in the entire banking industry where the central banks have to come up with the regulations controlling that particular model. It's a very good model because you do not need bricks and mortars of a bank, and you're providing financial services to people who have no access to the banking branches or accounts, and the money was transmitting from one place to the other. So this is something which the financial services are banking on. We as an organization are relying on a number of fintechs to provide their application, their platforms to us, so that we can offer the financial services to our customers as well as to prospective customers. That's how we are trying to increase our market share. That's how we are trying to make sure that the unbanked becomes the banked ones. Blockchain is something we talked about blockchain in one of the presentations earlier. Again, integrity of data is maintained in the different blocks of the data that is placed, and all of that is connected through a chain, hence the name blockchain. So banks are intensely and aggressively using the blockchain technology to make sure that the data integrity is maintained. Somebody mentioned in one of the previous presentations that if the reputation of an organization gets damaged, who wants to come and do business with that bank? I mean, that's very true, and that is very important to understand. The core of our operations is about data security. It's not about app security, it's about data security, because app doesn't provide any information. It's just a tool to manipulate and enrich the data that we have. How much balance I have, what is the mode of transaction, all of that is data for us. So we specify our importance in various controls that we built in, and that is the bread and butter of what exactly all information security people are doing in banks. So blockchain is one of those technologies, one of those areas which is widely used now by banking industry, so that the data remains intact and the integrity of this data remains absolutely pure. Robotics and AI is again something which is coming in to the banking industry. IoTs as well. Now, if you remember, if you've seen that people are using wearables, Apple Watch, Samsung Watch, these are intelligent devices that people wear. I don't have to take my cell phone out to take a call, or to make a text message, or to make a payment. All of that is done by my watch. So there must be something interesting about it. How this technology is embedded with my banking application. So all of that is being done through the IoT platform as well as the robotics and AI. The robotics is used for a lot of applications within banking systems, and it will continue to evolve. It's not about flying cars. It's not about autonomous vehicles. It's about self-service terminals, self-service applications. Now, there are a number of organizations, number of banks in Pakistan where you go on their website and there are chatbots available. They can actually service you without having the need of a human being responding to your queries. So you put up a request for a particular account, the chatbot or the robot comes back with the answer, and it will guide you through the process how you can perform the transaction or open the account or do whatever you intend to do. If you need to get services like where is the nearest branch, one thing is to go to the website, use Google Maps or any other application and locate the nearest branch. The other thing is the robotics system on my website can guide you based on your location, what is the most closest branch available to you or the ATM. In fact, we get a WhatsApp service as well, where you can actually send your location in, and the WhatsApp agent tells you that your nearest branch of this bank is 1.2 kilometers in the east direction. And there are a bunch of services that is being delivered through WhatsApp. So all of that is going to be used by financial institutions in 2020 and beyond. And I think the horizon is too wide to comment upon that where this journey is going to end. cloud is something which is becoming very popular in the banking industry, and it is going to take precedence over on-premises solutions in the near future. Uh, right now, the regulations do not allow us to go on the cloud because of security reasons, and because of the concerns that the data that we're going to put on cloud can be seen, can be altered, can be used or misused by different uh, attackers, different actors out there. Plus, the person or the organization who is providing the cloud service, we can't be sure that they have access to our data as well. However, this thing has evolved considerably. Now there are controls available where we can actually restrict access to the information to the cloud operator as well. Or perhaps we can have a hybrid cloud where we can store data on-prem while the application or the platform is available on the cloud. But this is going to increase tremendously in 2020 and beyond, and banks are going to leverage on this technology. So having said this, the entire service trend for services, financial services, there are various risks attached to all of that. And I've done some research, and I've come up for 7 key risks that are there, which the banking industry would be facing. I mean, a lot of it is faced even now, but it will be more prominent in the years to come, this year and 2021 and 2022. All of these risks will have an impact on the banking operations. And let's touch base on each of them slightly. Ransomware, and we're not going to go into the definition of what ransomware is, but ransomware is still prominent. We can still hear different banks get affected by ransomware where systems are locked, encrypted, and then they have to pay a ransom to get it unlocked. However, there are controls available. We have deployed a number of controls that, just like the presenter made it very clear in the previous presentation, there's no one solution for anything. If we want to protect our organization and our systems from ransomware, there is a multiple layered protection that we have to deploy so that if a particular ransomware comes in, it cannot be made active somehow. So there are various controls available, starting from a firewall to a monitoring system. And of course, the firewalls should not be just signature based, because there is no more signature based attacks that are coming in. It's always have to be AI based. So our protection have to be AI based as well if we need to defend ourselves from an AI attack. I think there was a question earlier that how to prevent ourselves from AI attack. You put your own AI as a defense. And this is what here is. Cisco offers a lot of products available based on AI. Similarly, Juniper, similarly, all other manufacturers that are providing firewalls, they are based on AI. We have a lot of deployment. We have segregated our entire environment into various layers so that this is defense in depth mechanism. So one particular malware, one particular threat, if it breaches the first parameter, it should not breach the second, third, fourth, or maybe the fifth parameter layer in any way. So this is what the protection means for the entire industry to put in. And we have put in, we have erected, signature-based firewalls, heuristic-based firewalls, application layer firewalls. So for all different layers of the OSI model, you have to put the defense in correctly to protect yourself from there. The next more prominent attack that is going to be there is phishing. Now there are many variants of phishing. There's SMS phishing as well, mailing, wishing. I don't know. I mean, a whole stream of that. The most important countermeasure for phishing is awareness. We have been able to, educate most of our staff. I'm not saying most of our staff, as in a very selected group of people, because when it comes to the nth level person, that awareness unfortunately is not there. So we've been able to tell our people to differentiate between a legitimate email versus a phishing email. And there are a number of red flags that are linked with that. And I think one of the, I think Ms. Bushra, when she was making a presentation, there were a lot of red flags available in that phishing email. How do you identify, whether this email is originated from a particular domain or not? You have to be sure if the links are there, whether these links are safe or malicious, the sender address is authentic or not. So you have to verify all those things. And with the passage of time, the users get accustomed to these practices. I mean, it becomes the muscle memory of those people to see an email and then respond to that appropriately. Otherwise, it's very easy to lure people in. We have actually tried this. We run our campaigns, phishing campaigns, purposely in the bank to identify the level of compliance or the level of awareness. And often people fall for it because either we construct our message a threatening one, an internal threatening message, or maybe an external, lucrative message that if you click this link, you'll get this much money, and that's the scheme of the bank, and people lure into it. So we can actually then go to them and make them understand the importance of the segregation between a good message and a bad message. So for phishing, the best tool or the best countermeasure is awareness that you can do. Of course, there are technical tools available, but that is a second layer only. Distributed denial of service through IoTs. Now, banks, I started working in a bank when it was all manual. We used to have ledgers and registers and vouchers. Today, vouchers are there, but it's only for record purposes. But we don't have those registers and ledgers anymore. So I come from that era. And I've seen this transformation from a manual bank into a fully automated bank. So now, with the introduction of IoTs, with the introduction of robotics and all, there is a very, very serious threat that the risks associated with these IoTs, with these robotics, we are unaware of it. We don't know how a particular device is going to behave and what sort of information it's going to be extracting out and sending it onwards. I was just reading an article yesterday that the Android operating system can actually configure to steal your information and transmit out to anyone you like. And it's not about the patch level or anything. There is something wrong with the Android construct of a particular operating system. A processor. So this operating system can be actually compromised if this particular operating system is implemented on a particular on a processor in a mobile phone. And from that information, I get to know that particular processor is so widely used that all of the Android devices that we are seeing out there in the market can be compromised very easily. So these kind of risks is, I think we don't know. It's in the unknown zone for us from the risk management perspective. What we can do, of course, if we are introducing a particular service, a particular component of robotics or AI or IoT in the banking system, we need to perform a thorough risk assessment. And if this risk assessment is done, only then we will be able to identify the risks attached to that. Without it, I think it's going to be a very gray area. And if something is happening, we would not even be knowing that what sort of attacks or what sort of compromises are happening into the bank systems. So that's very important to know. How we perform risk assessment is again a very straightforward process. We identify the threats that are linked with particular technology. Then we use tools to scan the various technologies to identify vulnerabilities. We design controls, put in there, establish the residual risk, and then come up with the further countermeasures that we want to put in. That's the whole risk management process which is used. The tools are not specific. We have to use different tools for different platforms. So that's how risk assessment or risk management is done. We actually heard a lot about insider threats over the entire day today, and that remains the weakest link in the chain, unfortunately. In the entire ecosystem, human beings are the ones who corrupt everything, not purposely. Means mostly it's error. But at the same time, we need to understand that what exactly humans can do, and then we have to train these people over and over again so that this lifestyle and this entire regime of processes can become their muscle memory. If that doesn't happen, then of course we can still expect, and I have actually written down the value, uh, the average cost of insider breach is like $513,000, one breach. So we can expect that these many breaches or these many losses will be incurred every day for any bank. So again, it's just about training and training. There are two principles that I've written down: need to know and least privileges. These are the basic construct of any information security domain. So we have to make sure that access to any system, any service in the organization is provided on a need to know basis and with least privileges. Nobody needs an admin account to do basic transactions. So we have to limit that. And of course, strict monitoring over the events that are generated out of their activities. The legacy is again something which will be a problem for banking industry because we cannot get rid of the legacy applications and the legacy infrastructure. For a consumer, it's very easy. Like, if you're using a particular mobile phone and you want to replace that mobile phone, you can just transfer all your data, and then you can, go ahead and start using one new mobile phone which has great new features and great amount of security in it. Consider that for a bank, a banking application and the data which is in there. We got data in exabytes for each application now, unfortunately. And we have to retain that data on site so that we can perform trend analysis, so that we can make accurate and knowledgeable decisions on the services that we are offering to our customers. Let's take the example of interest rates. If I want to publish an interest rate for my time deposit, I need to understand over the past 5 years what was the project or what was the trend of people putting in money into this particular type of time deposit scheme, and what was the maturity levels, how often people used to reinvest the same money or take money out, so that I can actually make it lucrative for my customer to come in, or maybe make it so difficult for them to come that they can actually make their deposits into another scheme. All of these decisions are based on data. So it's very difficult for banks to move out of a particular technology, a legacy application, into a new one, because the transfer of data and the transfer of information is very difficult. Plus, the legacy infrastructure carries a lot of vulnerabilities that you cannot patch. You've heard about the SMB vulnerability that WannaCry malware exploited, and it actually created a huge problem for the entire technical industry around the globe. This will continue to happen. We don't know how many legacy vulnerabilities are there for which no patches will be available in the near future. But we need to carry these legacy applications. So the only countermeasure available for these legacy applications is to put them in isolated zones, so that the threats that are there cannot affect other assets within the same zone or within the same environment. So if they are in isolated zone, they cannot be exploited by external attackers. Yes, insider threat is always there, but we can limit the extent of that particular damage. But these legacy applications will not be used for island hopping or lateral movement. So this is one of the key things to address when legacy applications are being handled. I'm very close to my last slides. ATM jackpotting, this is something new. If you have heard of Cosmos Bank in India, a bank in Oman that got affected in 2018, and then Bank Islami as well in 2018 in Pakistan. All of that was the result of an attack vector called ATM Jackpoting. And I'm not going to detail the attack vector itself, but this is getting evolved into newer shapes. We've been constantly receiving intelligence from our service providers that the attack vector has evolved into this particular form, so we have to design the controls. Again, there are manual controls available, so if technology doesn't work, it doesn't mean that we cannot control the impact of this particular threat. And how we have addressed this is monitoring of the daily limits. So if a particular transaction occurs, the limit reduces with the amount of that, and the limit is set up in a way that it doesn't hamper our business operations or the customer withdrawals, but it can give us some indication that the number of withdrawals taking place out of the ATM is on a rise, or the amount of money that is being withdrawn is on a rise, or the number of transactions occurring in a period of time. For example, in 10 minutes of time, how many transactions have taken place. So all of these use cases have been developed and put into these monitoring systems to provide us information so that we can react to a particular situation, so that we can get the system saved, the money saved, and the reputation of the bank saved from any particular threat. And so that's the countermeasure available for jackpotting threats available. And emerging technologies. I think a few of the presentations I saw this morning, I mean, they were talking about exciting technologies. And of course, the banks are eager to go into or roam into those particular areas as well. So they would be exploiting the benefits out of those technologies so that they can actually gain the market share, increase their profits, because this is why we want to make money at the end of the day. But at the same time, these emerging technologies would be carrying security risks as well. So if we are unable to identify those risks and we are unable to implement the countermeasures or controls limiting the impact of these risks, is going to be not a very good situation for us. It's going to be pretty bad. So the only countermeasure is that if you want to induct a particular platform or an emerging technology, a very comprehensive risk assessment needs to be undertaken. And these risk assessments, like I said, is a very robust process. I can give you an example. We are all users of WhatsApp, and that's very fine. It's an everyday use. We can make calls, we can share pictures, we can send voice messages and whatnot. So and we can make groups so that I can send any information to the group and it's delivered to all the people. But when we talk about integrating WhatsApp into the banking system, we had to perform a very comprehensive assessment, and it took us a month and a half to complete our risk assessment and come up with a working model how we can use WhatsApp securely. Because it is, it's a pretext that yes, WhatsApp communication is encrypted, but who's controlling those encryption keys? We're not. It's the people at Microsoft, people who are administrating the WhatsApp platforms. They are controlling those keys. So if they are the custodians of the keys, so they know exactly what is being communicated. And we do not want anybody else to see the data that we are sharing between the bank and our customer to anyone else. So we have to come up with a working model so that we can allow our customers to transact with the bank using WhatsApp without having the threat of this information being leaked out to anybody else who's not authorized. So this kind of risk assessment have to be undertaken for every technology that is going to be inducted in the bank, so that we can be very sure that no unmonitored threats or risk are going to be introduced to the banking system. So I think this is my presentation. I hope I was able to explain what the financial industry future is, what sort of services there were, and how we can actually make use of the various countermeasures available to protect the banking system from compromise and misuse. Thank you very much. Any questions? I'm here.
Thank you so much, sir, for the valuable insights about financial sector. Let's move on to the Q&A session. Okay, so the first question is, can you please highlight how the bank's operations will evolve in future as compared to present day operations? And what will be the role of blockchains in electronic payment systems?
I think the first thing that people need to understand is that the banks are going to be virtual in the future. And I'm talking about very near future. There will still be bricks and mortars because, considering the regulatory environment in Pakistan, we have to have these branches and these head offices. But majority of the services will be available through either the mobile phones or the wearables, and maybe some other medium. So it's going to be virtual. How we use blockchain? We use blockchain to make sure that our data remains confidential all the times, and the integrity of the data is maintained. So if one particular block of the data is compromised because of any particular threat, the entire chain of data is not disclosed in any way. So this is how the banks are trying to use. We are not using blockchain at this point of time, but I've heard an insurance company has started doing that, and I think stock exchange is also reviewing the implementation of blockchain for their processes as well.
Okay, so sir, the next question is, what's hybrid cloud computing?
Hybrid cloud computing is public cloud plus private cloud. If you combine both of them together, that becomes the hybrid cloud. So part of it is owned by you, part of it is owned by a service provider, and then you can either launch your applications on this cloud, or you can use the platform offered by a third party. That is a hybrid cloud.
Okay.
I mean, that's a textbook definition for that.
Okay, so the next question is pretty long. The Court of Justice of the European Union has nullified a 2016 data sharing agreement between the US and EU. Now, companies in Europe are facing an uphill task for the legality of data sharing across the border. Do we have data sharing agreements or laws outside of our country regarding the protection of private data of our citizens? If yes, do we have any data breach reported or review of the protection of private data shared across border, either through social media, cloud services, or any other means?
This is a copy paste from WhatsApp notification. I also received that. I don't think Pakistan has any kind of data sharing legislation or contracts with other governments at this point of time. But my knowledge about this particular area is limited to the banking industry only. However, if we are transacting with any counterparty within any other country outside the geographical jurisdiction of Pakistan, then the agreement that is made between both the parties are regulated or is regulated by the particular regulations of that country. For example, if we are doing a transaction or a agency arrangement with a particular organization in the UK, then the GDPR applies on them as well as on us. So data sharing and data protection gets mandated on us as well as the requirement of the GDPR itself. So that goes on without saying that any contract made by any banking institution or any business entity with any other entity in another territory outside the jurisdiction, that will be governed by a contract law which requires that international data protection laws are adhered to. But it doesn't say which laws, it just says this disclaimer. So it has to be there. But as I said, my knowledge in this particular area is very limited. I'm not from the legal side in any way.
Okay, sir. So let's move on to the next question. Is there any single piece of advice for starters who are at the beginning of their careers in security?
Just learn one thing. I mean, I go to a number of classrooms where people are very eager to learn technology and learn security. So the only message I give them is, try to learn common sense, because security is nothing but common sense. there are a number of tools available and it's never ending. If you ask me if I'm an expert in a particular tool, I'm not. I know maybe 38, 39 different tools that I use at my workplace every day, but I'm not an expert on that. Maybe I'm not an expert on the remaining 119 other tools that have been used in the industry. But one thing is for sure, if you apply common sense on any problem, be it a security problem, be anything, you would be able to identify the risk. And as a security professional, you can be a hacker, you as in a white hat, you can be a security monitor, SOC analyst, you can be a governance person writing policies. If you apply common sense to any situation, you would be able to identify the risk there. If you're able to identify the risk, development and implementation of a countermeasure or control is very easy then, because you know the problem and how to go around this problem is very easy then. So try to see things from a common sense perspective. If something is not making common sense, it is definitely not right.
Thank you, sir. So the next question is, can you please name any banks around the world that use cloud to store data, keeping in view the cyber threats associated with cloud computing?
I'm pretty sure the internet banks, the virtual banks in the world, North America especially, they are using that, but I do not know the names, unfortunately.
Okay. Next question is, like you said, we can trace money trail, but still innocent people are tricked on phone calls and they have lost money using e-bank accounts, EasyPesa, MobiCash, etc. Then why are huge number of cases still pending? Please explain what's the shortcoming of the system to address these issues.
Uh, Again, we're actually going out of information security, cybersecurity, but that's okay. Uh, the problem is when a social engineering call or a phishing call comes in and people disclose their credentials, disclose their PII to the fraudsters, a particular type of transaction occurs. Now, if this transaction is bank to bank, and I'm saying very categorically, if it is bank to bank, it can be traced, it can be stopped, it can be reversed. It's very easy. But if it is withdrawn in cash, if it is sent out to an EasyPass account and withdrawn in cash, the money actually got out of the system. Now, the other side is banking accounts are heavily regulated. We know exactly who the person is. And if you have come across the very recent regulations about Benami accounts, where the government actually has stricken down a number of accounts, frozen them, take the money into their kitty, where people were not sure if the account holders are really true or fake. A Faluda wala having 2 crore rupees in his account, those kind of things. So the banking accounts are very regulated, so you can actually trace the banking account to an individual, but these mobile SIMs are still something which is very widely used as fraudulent ones. People can still, activate their mobile SIMs using fake CNICs, fake biometric signatures, and whatnot. Because of this particular threat, if the money goes out of the banking system and it is given out in cash, then it cannot be traced back, unfortunately. So the reign or the span of control goes beyond financial institutions. And if that happens, then the controls that we have deployed as banking systems, banking institutions, fail very miserably, unfortunately. So this is something which our government officials, especially FIA, is doing. And yesterday Mahmood was there. He is one of those people who has been trying very aggressively to curb this kind of threats. Tomorrow, Ammar Jafri is also making a presentation. Ammar has been the director of FIA, he's actually creator of the NR3C. So these people have been working very hard since long to curb this, and it has actually been the case. The number of instances have been reduced drastically, but still, you cannot eliminate this. Even in very mature economies, these attacks, these threats are existent, and people still lose money in America as well using social engineering, unfortunately.
Okay, so we have one last question. Is it safe to use e-banking in Pakistan in the perspective of financial scams?
You can do that, Ji. With all my heart. I'm asking you to the. However, you have to learn how to do safe banking or safe methods to do transactions. Uh, if you're using your mobile phone, you have to make sure that your mobile phone is all patched up. There are no missing security patches that they're there. Your operating system has to be updated all the times. The app that you're using for that particular bank is updated. So if there is a new version available, you have to download that. You have to make sure that the App Store or the Google Play Store that you're going to is the authentic one. If you're using a PC, then you have to make sure that your operating system, your browser, and the various firewalls on your personal equipment are up to date. Then you have to have safe browsing uh, techniques as well. You have to have that regime available that you do not go into sites which are fraudulent, which are malicious, and they can actually leave malicious content on your PC and your mobile phone, and that can actually trigger some bad things. If you don't do that, it's always safe.
Okay, so sir, what's your view about the apps that different banks or almost all banks are providing? Is it safe to use those apps?
Very safe. Very safe.
Okay,
You know,
thank you very much.
me
Sorry.
representing a banks, if I say that it's very unsafe, it's ironic. I'm a very fond user of my bank's mobile app, and I think I encourage people to use that as much as possible.
Okay, thank you very much, sir. It was
It's a
such
pleasure.
a pleasure to have you here.
It's a pleasure to
Thank
be
you.
here. Thank you very much. Assalamu alaikum.